Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you. I need to apologize to everybody. I'm dealing with COVID, so my voice is kind of in and out. So bear with me.
There you go. You're doing great. Thank you for being here. Folks, before you ask, I did ask if he wanted to cancel this week. He said no, I feel fine. So don't leave me any hate below. Of course I asked. I am a nice guy. Sheesh. So
Yeah, I would have texted you
yeah,
otherwise.
I appreciate it, man. Yeah, we've been talking for what, 3 years now, something. So yeah, we're good friends at this point. Hey, I want to talk about 2023. I actually now believe 2023 may go down is the worst global economic year of my adult life, which is saying something, right? The Great Recession, the dot-com crash, 9/11. I think 2023 is going to be a global recession. I think we've had two in the last 100 years. I think this will be the third. And instead of focusing on the negative, I want to flip the script because you and I have always said, and I know we both believe, wealth is created in a recession. So I think there will be some amazing opportunities next year. And I wanted to ask you, where would you be looking, right? If there is a global recession, where would Greg Dickerson be kicking over rocks looking for opportunity?
Yeah, there's a lot going on. And from a global standpoint, energy is a big problem, especially in Europe. And it's all over the headlines there where businesses, the news and headlines are making choices of how they're going to stay open and, if they're going to close half the day permanently. So it's at a point now in Europe where businesses actually cannot continue to operate with energy prices where they are. With the situation with Russia and what they're doing, with energy and oil and things like that, the pipeline with gas. So as we get into the fall and winter, that's going to be a huge issue that's going to really, create a little trickle down effect,
Ripple, yeah.
ripple effect throughout the economy globally. And, obviously we're in a globally connected world still. So there's a lot of things out there that are creating problems for 2023 that everybody's kind of now starting to look at and realize, wait a minute, this isn't just a COVID thing. This just isn't a temporary transitory thing. We've got big issues that could potentially be a problem, and you need it because inflation is a problem everywhere. Europe more so than here. I think they're a little bit, behind the U.S. in terms of what's happening, or maybe we're behind them. I don't know, but either way, we're seeing inflation spike everywhere. That's not coming down anytime soon. So that's going to affect, everything. People are going to pull back on their spending. Costs are up, so things are going up, which people can consume less. So that kind of just feeds on itself, right? So where are your opportunities going to be? Obviously, there'll be opportunities to come in and take over companies and businesses that need talent, need capital, need things like that. There already are a lot of businesses closing and continuing to close. So there'll be some locations that you can step into and take over easily. Real estate, obviously, in some areas, some types of assets are coming under pressure, and there'll be opportunities to step into those and take those over. And then you have the markets, which are resetting and repricing. Your big generational opportunities in the market are coming. Once we get through inflation, we get through recessionary, where is it going, how deep, how long, how far, when the Fed, central banks around the world are done doing their thing, there's going to be some real generational opportunities in the markets. We're not there yet, but it's coming.
Yeah. A couple of things I want to talk about as a kind of real estate channel. We've talked about them kind of in passing. I think we mentioned it very quickly in the last video. One of the opportunities I think is out there, again, selfishly, kind of micro, we're talking macro global recession, but micro, Olivia and I think there's a good chance we buy the biggest building we've ever owned. And it's because of the lunacy in the bridge, short-term bridge, 1 year IO, bad assumption, multifamily. I mean, it may be too soon, but 2023, 2024, there are going to be some loans resetting, higher cap rates, higher rates, bad assumptions. Some people are going to have to get out. Is that an area that is ripe for looking at, you think?
Yeah, absolutely. And those are some deals where you can step in just with a balance sheet on those
Yeah,
types of things and just kind of take them over and stabilize it. You have to obviously get approved by the lender and things like
sure.
that, but there'll be deals you can walk into with no money and just kind of take them over. There'll be some sellers that are going to want to get out of deals because as these things reverberate through the economy, tenants will be under pressure. With energy prices, with other inflationary concerns. So people are moving because rent's too high. People are stopping paying, and especially in other countries like China. I mean, you saw the
Yeah, I
whole
saw that. Crazy.
mortgage boycott there. That resonates around the world, and you start to see other populations doing the same thing. So, and we saw rent boycotts during the pandemic where certain properties tenants would get together and create a little, boycott within the property and stop paying rent at scale. So, so yeah, that creates opportunities. And like I said, sometimes it's just, capital that, you need a little bit of capital to step in. Sometimes it's a balance sheet, sometimes just intellectual capital where you can walk in and just understand how to navigate this environment and be creative and, take things over and move forward from there. So a lot of different opportunities.
Yeah. And again, Olivia and I have done this before. We've worked directly with banks, taken over properties. We took over properties. We got reduced interest rates, zero down. We did have to escrow some money, but again, we had to repair the building anyway, so it wasn't no harm, no foul. But yeah, I think those opportunities coming. And I think they're going to be, again. I'm trying to speak it into existence. I think Olivia and I will buy our biggest building in the next 24, 27, 28 months. That's one. Another area that I think is very interesting to think about is Airbnb. I think Airbnb had a very good 2-year run. I think it was taught as the easy button. Again, it's nothing I've ever done, so this is just all speculation. But I think there are some kind of Airbnb markets, second home markets, where prices got stupid. And I think Airbnb rates are going down. And I know Airbnb is being attacked, like San Diego's come after it, Honolulu's come after it, Atlanta's come after it. So I think there may be some tertiary markets where people have overpaid for Airbnbs that, hey, if you ever wanted a second home, I think you're about to get a big discount. What do you think?
In some areas, yeah, like you said, there's certain cities that are coming after it. There's other areas that's what it's been. That's all it's been. Like where I started on the Outer Banks, we saw those prices get nuts, but it was all in relation to the interest rates, and we're seeing it start to correct now. Prices are changing, inventory starting to build, but it's still an area with high demand, and the stuff is still selling at stupid prices. Some of the stuff that I've seen, but it all depends on the market. There's still going to be a demand for that. People are going to take that vacation. What we've seen shift in that rental market is more last minute stuff. It used to be people would book well in advance, years in advance, months in advance, that kind of thing. Now people are waiting and booking last minute, shorter trips. So that's what's interesting. That's actually kind of helped the short-term rental market because you can get a premium for shorter trips a lot of times when people are booking last minute, and there's more competition for it. So it's really all about the location, the type of property, things like that. But where a lot of people are getting into trouble or got into trouble is with the whole Airbnb, what they call Airbnb arbitrage, where you just lease, master lease a property.
Sublease,
yeah, that kind of thing. I mean, that's where people can get into trouble with those types of deals. But in terms of, good properties in good areas with good ratings and things like that, they're still doing well. It's still strong. People are going to take their vacations, especially in an inflationary environment. People will do less big trips and smaller, shorter trips, kind of spread them out. So I don't think we reached saturation there. And again, my experience goes all the way back to 1997, and our market grew every single year. More people coming, rents going up. Even in the financial crisis, 2009, people still took the vacation. We saw a 10% dip in rents for the first time ever in the history of that area, and it was really only the high end stuff. People moved back, traded down, spent less. They brought stuff with them instead of buying stuff there. They didn't go out to eat, so the restaurants all took a hit. A lot of them went out of business and things like that. And that's when I made a foray back into the restaurants back then, started taking over restaurants that were closed and doing that kind of thing. So there's always going to be opportunities and things like that, but I don't think that market's taking a hit at scale. But there are some cities that are going to try to shut them down.
No, that's exactly right. It's very, again, I'm kind of looking at a macro picture. And again, I think there are some cities like the Outer Banks, mini markets in Florida that kind of welcome it. It's like what the cities are built on. They're going to be fine. But it's just, I think some markets got a little over their skis, and we'll see what happens. And then the last one you talked about, you just mentioned, there's going to be tremendous opportunities to take over businesses. You talked about restaurants and doing that before. I think there's a lot of that coming down the pipe. And again, as you've told us repeatedly, some of the best deals you've ever negotiated on seller financing weren't for real estate. It was for a business. And maybe the business had real estate, but some of those deals coming down the pipeline are going to be amazing, I think.
Yeah, absolutely. I mean, that's some of the best times is, during contractionary times, just because, a lot of people just don't know how to navigate that environment and can't or don't want to. So, some businesses, there's just no back end buyer. The only way they can get a buyer for it's to owner finance. And that's kind of always the way it's always been. Real estate's, a lot of it's been the same way. I mean, there's some sellers that don't want to sell. They don't want to chuck the money. They want long-term income. And, I was talking to somebody the other day that just did a deal with a note that was, had built in, no matter what happened with the property, they wanted their payments, and it was over like a 30 or 40-year period of fixed payments. They're like, look,
Sure.
you can sell this property, but we want payments. We don't ever want to be paid out.
Yeah.
in
Don't, we're
full.
not being cashed out. Yeah.
Yeah. So how do
Yeah.
you do that? You say, well, hey, look, I've got this deal here where you can make payments for 30 years. I'll give it to you for 100 grand.
Right.
So I transfer you the property, you pay me 100 grand, you still make the payments.
There you go. Yeah, exactly. I just had another idea. Oh, the other thing that I think is going on right now, again, I have some flippers that come on my channel. All of them to a T have done a couple of things. First, they've all started focusing below the median. I think flipping to FHA and VA buyers below the median will still work. I think the $1 million luxury flip, HD TV flip, is going to hurt a lot of people. I think it's still safe below the median, but want to get your opinion.
Yeah, again, it's still market specific. So there's going to be markets where you're going to be able to get what you can get because it is what it is. But generally, yeah, you see the high end take a hit first, and you see resort markets take a hit first. And obviously, like we've been talking about, the builders, they were really the first ones.
Yeah.
But you'll see the other ones right behind it, just like the luxury goods market.
Yeah.
You're seeing that take a hit. You're going to start seeing fancy sport cars, exotic cars for sale for cheap, Rolexes.
It's coming.
All that. Oh, it's already happening,
Yeah.
so people are already out there liquidating. So that's what happens in contractionary times and recessionary times. And same thing happened in 08, 09. Everybody was selling their Ferrari and Lambo and Rolexes and their second homes and third homes and fourth homes. That's what happens.
So the last thing to talk about, again, I've never done this, but again, I could see it coming. We now have strong dollar. I think the dollar gets stronger. The dollar actually, the euro's now at it broke 99 cents. It was trading, kind of 1-to-1 for a while. It now is 98 point something. So it's even getting the dollar stronger, euro weaker, which makes sense. But if you have an appetite to buy European real estate, or frankly, even European business, European assets,
or travel,
yeah, the travel, absolutely. The dollar is going a long way. We actually have some friends coming in from Japan, which is obviously the other story. The Japan yen is really weak. It's like, God damn, this currency is crazy. But yeah, if you have strong dollars and an appetite for foreign investment, I think there will be some very interesting deals done in the next couple of years.
Yeah, it's really interesting. And we're already, we're well above 2008 and 9 levels.
Oh, yeah.
Headed back to that potential. A lot of people have a 120 target on the dollar. And it's at 109 right now. So
it's going.
As the dollar increases, that puts pressure on risk assets, and especially cryptocurrencies, Bitcoin and gold and things like that. The dollar really affects those. Yeah,
I know you watch Bitcoin a lot. I haven't asked you this in a long time. Do you think Bitcoin holds the 19-20,000, or do you think it's got to test sub 10? Just curious.
Well, I don't know about 10 right now. The level I'm watching is at 17. That 17.5 that was the recent low. Okay. As long as it holds that, it's going to continue to hold. But I think, given the environment right now, if we get another strong inflation report and the Fed raises 75 basis points, I think it's going to take its next leg down, which is about that 15.5 mark. So I think that's next up, that 14.5, 15.5 right now. It's been trading in that 18.9 to 20, 21,000 range.
Yeah.
And it's held well so far, but I think, pressure is getting to it. And I think it's going to reach that next level in the 14.5 to 16.5 range and just kind of trading there for a while. But there's a lot of technical confluence for that 10,000 level. I think there'll be a lot of interest if it drops down the next level of 14s to 15. So it'll be tough for it to get there. But if it does drop down to this next level, it could trigger some liquidations. It could take it down lower. So it's going to be interesting to watch.
Very cool. Well, do me a favor. You have an amazing YouTube channel. You do focus on cryptocurrencies and a lot of other things that I don't. Where can people find you?
Yeah, gregdickerson.com. That's where all my info is. Go check it out.
Thank you very much.